Okay. Hello, everyone. Good morning. Before starting, we have a question for you. Do you know that sustainable companies are the ones that most attract investors in the stock market? So today, we're going to share information about Waste Connections and why it's a great investment option. Next, please. First, they are constantly growing. Its stock price has been from $18 to $130 in the last 10 years. Waste invests a lot in valuing human capital, being attentive to and contributing to the local community needs. And also, it's highly committed to the environmental causes, having invested $500 million to help achieve ESG objectives and participate in Canada goals of reducing plastic consumption by 2030. Next, please.
Waste Connection is a leader in collecting, transfer, recycle, and recovery solid waste resources in the US and Canada, has millions of US and Canadian consumers, and it serves single and multi-family homes, commercial institutions, industrial sites, construction sites, and special events. Next slide, please.
The market is valuable in almost $230 billion by 2027, with a CAGR of 5.3% between 2020 and 2027. As we can see, the top 5 recycling countries are almost all in Europe, and Canada and US show up around like the 20th position. The competitive positioning, including Waste Connection, count with 4 companies, just 1 in Canada. And as we can see, the market cap goes from $65 billion to $10 billion. And mostly the companies are based in Texas, California, and just the Canadian in Ontario.
Here we have a graph about how Waste Connections grew up comparing to some important indexes. The first point to mention is about that the company had 18 consecutive years of positive total shareholder returns. And this is an important information to decide to buy its shares. After that, we can see that Waste Connection TSR grew up in 577% in the last 10 years. In other words, the shareholder who purchased the shares 10 years ago saw a growth of 577%. In green, you can see is the S&P 500 index comparison. This index is the index the largest 500 companies that trade in the US. And the growth of Waste Connection represents more than 2 times of that index. And also, as you can see in red, the Waste Connection index also represents more than 2 times than the Dow Jones Waste Index. Next slide, please. The second graph shows the distribution history per share that Waste Connection made over the last 12 years. And as you can see, shows a significant increase during this period. Next slide.
So to talk about the investment risks, we need to understand who are the main waste producers. We are as an individual or organized in a group as a company. And for the waste management industry, it is one of the main demands is coming from a construction and demolition. So anything that affects that type of activity can affect our demand as well. And changes in public-private partnerships happen at the municipal level in most of the countries. So anything that is from a legal perspective or a policy perspective that can change can affect us as well. Third point is because as an individual or as companies, when we consume at a higher level, we produce more waste. So anything that affects our power of consumption is going to decrease demand as well. The fourth point is one of the main cost lines for this industry is the price of oil because of the truck fleet and all the machines that heavily rely on oil. So the price of oils affect that industry very, very much. And the last topic is specific to Canada. There is a plan to reduce waste in the country, so that could, on a long run, affect our demand as well. Next slide, please. Here we selected 5 ratios. The very first 2 of them are liquidity ratios, and the liquidity ratios, they tell you how easy it is for a company to transform their assets into money in order for them to pay their debts. And what we saw here, it was a decrease in this ratio from 2020 to 2021, and that is explained by the company investing in its growth. So in their financial reports, they mentioned that they have been investing in incorporating other companies and expanding the market. So that is a growth plan that they invested on. The third ratio is debt to equity. That basically tells us the ability of the company to pay their debts and how they structure their capital, because the company is investing again in its growth. So their accounts payable grew 25% in 2021, and that is explained. That explains why it increased. The very last ratios are kind of left profitability ratios. And the first one is earnings per share. Earnings per share grew from 2020 to 2021. That is because basically the company grew its profits, and on top of the common shares that were issued in 2021. So that explains why we had an increase. And the very last ratio depends on the earnings per price. So we saw that from 2020 to 2021, it decreased this value, and that is actually a good thing, because it means that the price of the share, it's at a more fair price. It's actually 57 times on top of the earnings per share. And that is a good thing, because the value of the money that you as an investor is putting on the share, it's making you earn more profits.
It stands for environmental, social, and governance. These three factors influence directly on the company's health. And since 2016, when the baseline of the company took place, the company doubled size. So now in 2022, there are some ESG targets, as Marcel mentioned, that now are incorporated in the inside of the company. It also has the lowest emission intensity in the industry, and 30% of the power that the industry generates, that the company generates, comes from renewable resources. On the social side, it has been a decrease of 25% of accidents. So this means that safety is always above the average, and every time it's getting better. Also, they put 50 million in frontline since the pandemic. And on the governance side, there has been now a board of directors to monitor the ESG targets are properly managed and properly getting closer to the goals every time. And there has been some other programs that manage management compensations. So this means that the company is doing well on this side. So what's better than words? Actions. So now the company has these new plants coming in line, 2 recycling facilities, and they are also applying and putting the effort for new technology to apply to biogas, and just keep the investigation about the development of these renewable resources. So everything must be ready by 2023. So 3 to 5 projects will be ready by 2023. Pretty much that will be all for us. If you have any questions, feel free to ask us. Thank you.